Hi there, this is Simon, personal finance coach. This video is about what stock splits mean to investors. Broadcom, the technology leader in semiconductors and infrastructure software solutions for data centers, cloud computing, and AI, reported excellent Q2 results, beating revenue and earnings expectations, and its shares jumped to a record all-time high. Broadcom also announced plans for a 10-to-1 stock split and will give its investors 9 additional shares for every share they own when it goes into effect on July 15th. Broadcom became the 9th company this year to announce a stock split, following the footsteps of some other major corporations. A stock split occurs when a company decides to divide its existing shares into multiple new shares. It's like cutting a pizza into more slices. The total amount of pizza remains the same, but you have more slices to distribute. A big reason why companies enact stock splits is when share price rises significantly, it makes purchase of the stock more difficult for individual investors, which is the main reason Broadcom cited in their decision to enact a stock split. Stock split often serve as a trust signal to investors from company leadership. It indicates that management believes the company's future is bright and that the stock price will continue to rise even after the split lowers the price. While stock splits have no impact on the underlying fundamentals of a company, nor do they impact company's market value, they are historically a bullish signal. Having a larger number of cheaper shares can have the psychological impact of making shares look more attractive and can have a renewed interest, which can have a positive effect on the stock price. I wanted to research if this is indeed true, and I looked into 10 stock splits of major companies that announced stock splits in the past few years and compared stock prices of these companies at the date of the announcement and 12 months after the announcement. The results of the research are very revealing, and I will share the details. In the interim, please subscribe to this channel to receive notifications on new videos.
The 10 company stock splits under research included Apple with 4-to-1 split in 2020, Tesla with 5-to-1 split in 2020, NextEra with 4-to-1 split in 2020, NVIDIA with 4-to-1 split in 2021, CSX with 3-to-1 split in 2021, Intuitive Surgical with 3-to-1 split in 2021, Alphabet with 20-to-1 split in 2022, Amazon with 20-for-1 split in 2022, Tesla with 3-for-1 split in 2022, and Palo Alto Networks with 3-for-1 split in 2022. The summary of the research is that 12 months after the split announcement, 4 companies outperformed S&P 500 index. These companies were Tesla, Palo Alto Networks, Apple, and NVIDIA. 6 companies underperformed the S&P 500 index. These companies were CSX, Amazon, NextEra, Alphabet, Tesla, and Intuitive Surgical. The group of the 4 that outperformed S&P 500 outperformed it by average of 46%. The group of 6 that underperformed S&P 500 underperformed it with an average of minus 12%. So if you had invested in all 10 companies at the time of the split announcement, you had outperformed the broad market by 34% in 12 months after the announcement. This positive return is heavily impacted by Tesla's gain of 158%. But even excluding Tesla from the count, you would still have outperformed that market, but only by 8%. This validates the independent claim that stocks that split on average tend to beat the market index. Bank of America validated this with their own research, claiming that average returns 1 year after the split are 25% versus around 12% for the broad market. And the split seemed to be bullish across all market cycles. So maybe investing in a company at the time of the split announcement is not a bad idea. The rest of this video covers the stock splits and the stock performance graphs for the 10 companies under research. Tesla announced the stock split on August 11, 2020, and 12 months after, the stock was up by 158% versus S&P 500 of 33%. Palo Alto Networks announced the stock split in August 2022, and 12 months after, the stock was up 39% versus S&P 500 of 6%. Apple announced the stock split on July 30th, 2020, and 12 months after, the stock was up by 52% versus S&P 500 of 35%. NVIDIA announced the stock split on May 24, 2021, and 12 months after, the stock was down by 6% versus S&P 500 of plus 3%. CSX announced the stock split on June 4th, 2021, and 12 months after, the stock was down 3% versus S&P 500 of minus 3%. NextEra announced the stock split on September 14th, 2020, and 12 months after, the stock was up by 20% versus S&P 500 of plus 31%. Amazon announced the stock split on June 3rd, 2022, and 12 months after, the stock was up by 2% versus S&P 500 of plus 4%. Alphabet announced the stock split on February 1st, 2022, and 12 months after, the stock was down 26% versus S&P 500 of minus 9%. Tesla announced the stock split on August 5, 2022, and 12 months after, the stock was down minus 12% versus S&P 500 of plus 8%. Intuitive Surgical announced the stock split on August 5th, 2021, and 12 months after, the stock was down minus 29% versus S&P 500 of minus 6%.
So to answer the question if Broadcom will continue to rally depends on Broadcom and how the company will continue to execute and grow its fundamental market value.
Please subscribe to this channel to receive notifications on new future videos, and thank you for watching.